Good morning, everyone. Nice to see you all here at AusCryptoCon. We have been here a fair few years now, so it's nice to be back on the stage talking again.
That's it. Let's kick it off. What are we talking about here today? Simon, what is the aim of this session?
It's in the title, mate. How to create bulletproof crypto sell strategy. So just out of curiosity, actually, first up, do we have any Collective Shift members in the room? Do we have any members? A few. There's a few here. Thank you for your support, guys. Good to see you. Let's get a raise of hands of who is in their first crypto cycle. Who's been in like only 6 to 12 months? A few. What about who has been here since like 2021? Who's in their second cycle? A few. And who has been here since 2017?
Good balance. Good balance.
Still some people have been here quite a while. It's good to see.
Yeah.
Who here has taken profits this cycle? And who here wishes they took profits this cycle? Fair enough.
Good balance. Good balance. And we'll get into, I suppose, a lot of work we do at Collective Shift is covering the market, covering individual projects, and also sharing different tips and tricks to do with like portfolio structure in the crypto space specifically. A lot of 2025 and still into 2026 will be focused on the sell side and exit strategy while we still navigate this market, which we will be talking tomorrow as well, roughly the same time about, I suppose, our thoughts on the state of the crypto market and our outlook for it. But today will be all about sell strategy, how to navigate it, how to plan it. And the first thing, of course, has been a big topic, I suppose, in the past 5 or 6 weeks as markets have been weakening. Risk versus reward, I think, has come up time and time again. So, Simon, kick things off with one of your favorite topics.
So, talk about selling all we want, but one of the things that I do after having done hundreds of one-on-ones with our clients and talking about portfolio allocation, portfolio structuring, is actually kind of understanding risk to reward in this space. Because most people really don't quite get, everyone is here for obviously the green candles on the upside, but people don't really realize the downside risk in this space as well. We all want to make money, we all don't want to lose money, but sometimes you've got to think about just protecting your wealth in this space as well. And so when we talk about risk to reward, obviously, one of the things that most people don't truly get is talking about and thinking about, oh, there we go. Do I have to point that up that way? Is time horizon. Because when you are investing in crypto, when it comes to time horizon, you've got to be thinking, well, if I'm thinking I want to invest in the space for the long term, realistically, the only one you can do that with is Bitcoin. Why do I say that? Because if you'd bought Ethereum 4 years ago, well, you haven't made any money yet. If you bought XRP 8 years ago, you haven't made any money yet. Bitcoin is the only asset in this space that's actually continued to go up over time. So if you're thinking, I'm going to be investing in the space for a long time, or really it's only Bitcoin. So time horizon is important. If you're owning altcoins, you're in it for a good time, not a long time, for those periods where altcoins outperform. And so we are at a point in the market now where obviously it's pretty fearful, isn't it? I imagine most people are like a little bit worried about the market. Is there anyone like that? No, everyone's fine. One man. I'm pretty fearful in the market right now. So when we're balancing obviously risk to reward, there's also upside that we're thinking about, and then there is the downside potential that we're always got to think about in this space. And so when you're investing in altcoin, everyone thinks, oh, 5Xs or doubles or triples. Everyone thinks about that upside and going, okay, how much can I make from the money? If you look at the history of crypto, and you look at the history of the markets, and you look at the risk aspect of altcoins, you've got to remember the downside potential. What's that downside potential? It is like 95% down, guys. 95% down is your risk profile. And so if you understand the idea of the crypto cycles, you've probably got an understanding to a degree that, hey, that there is like this kind of 4-year cycle. Is it a Bitcoin 4-year cycle? Is it a global business cycle? We can have a chat about that later at our booth if you want. But there are cycles. And no one thinks about the fact that when I'm investing in these risky altcoins, 95% down is actual, the risk that I'm taking here. So you've got to keep that in mind. And where we are now in the cycle, most of your altcoins are probably down about 40, 50%. How much further they can go down? They can still go down another 90%. So keep that in mind to have that profile and understanding of risk. And I think I did mention before, where we are in the cycle, that's very important. So this is not 2023. For those who have been around, most have been around multiple cycles, you'll remember 2022, horrible year. Who here was going, oh my God, 2023, this is time to invest? Who thought this is the time to get into this crypto cycle in 2023? Only a few, because everyone was scared shitless, weren't they? So that was the time to invest in this cycle. That is the risk to reward in the cycle. But at that point in time, the risk there was very minimal. We could see the good projects, we could see what was going on. So I would urge you all, when we're in this fearful point now, is not to just think about how fearful it is right now, but think of the opportunity that downside markets create. Think of the opportunities that come from being in a fearful state and the market going down, is that those big opportunities are there. So keep that in mind when it comes to risk to reward. It'll help you be a better investor in the space.
We'll get into some sales strategies and what we work through with different clients, how to put together a sales strategy is one of the most, I suppose, common challenges investors have in this space in particular. Before we do that, I would just like to highlight some things to consider over the years. Again, just tips and tricks that I've learned, and hundreds, thousands of people we've spoken with have all learned. And the first thing that I would like to highlight is alignment with investment goals. I think one of the biggest problems in crypto is it's a very social asset, very momentum driven. So a lot of people, when they're talking on social media about the state of their portfolios or the potential of a given investment, people often talk past each other when they're talking about their own investment goals. There'll be someone who's a lot more short-term orientated. They will have like a lot of active management of their crypto. Other ones that we work more closely with are people who take a more passive approach and are there for the long term. So when you see all the fear on social media, it's often driven by traders and people who have the time to manage their portfolio. So talking past each other, whenever you're thinking of the topic of sell strategies or exit strategies, just be aware that it ultimately comes back to your own individual goals and risk tolerance. Like, again, that sounds very simple, but trust me, when you are on social media and everyone's losing their shit about where prices might go next week, just be aware that everyone else has different contexts and different, I guess, degrees to which they manage their risk. The next one, of course, is tax implications. Obviously, a lot of people here in Australia, pretty straightforward about, capital gains for most of us. Whenever you're investing in crypto, is a capital gains, and when you close it, that's also a taxable event. So understanding the optimal way to structure your portfolio or your investments in crypto is very, very important as well. So Crypto Tax Australia is a tax accounting firm that specializes in crypto. We do a lot of work with them to help our members, I guess, get the optimal setup. And it's something that, as Australia is advancing, with SMSFs being able to get exposure to crypto, there's a lot of different ways you can go about formulating and putting together your sales strategy with tax in mind. And obviously for some of our international members, we have, partnerships or relationships with, tax advisors and whatnot in the US and Canada and other countries. So it goes without saying, tax and structuring is of extreme importance. Not sure if this is, it's a bit delayed here, Simon, but the last one that we have to talk about to consider is, it's all skimming through them now, but that's all great. Risk tolerance and level of sophistication. As I spoke about, we deal more closely with like high net worth individuals who are, executives, business owners, who ultimately just don't have the time to keep up to date with crypto. For them, what is their level of sophistication when it comes to having a sales strategy? For them, it's a lot more of a passive approach where they can't just be chopping in and out of the market every week or every day like you do see in some other groups that are, understandably more focused towards traders. So again, understanding how deep you want to go into sales strategies, very simple, but again, you can easily be swayed by thinking you need to be more active. If ultimately you're a passive investor, consuming all YouTube, TikTok can really, I guess, play on your emotions and level of conviction.
Yeah, thanks, Matt. So let's get into something practical, I guess. We want some practical ideas takeaways for you guys to actually take home and actually deal with. So types of sell strategies. This is something like obviously we talk about with our members a lot to make sure they understand the different ways to actually get out, because most of you are probably aware, like, it's pretty scary sometimes when you're actually buying into crypto. Most people actually find it even harder to sell crypto. And so, you've got to have some strategies in place, write some goals down how you're going to do that to actually execute on your sell strategy. And so we'll start with like one of the most basic ones first, which this clicker doesn't work very well, guys. There we go. So here is the most obvious basic sell strategy, which probably all of you have employed at some time, is like simply having target prices. You're going to have a price, what you want the crypto to go to, and you're going to sell a percentage of your holdings. And so it's easy, it's simple, it's great to understand. I guess the downside of this is like, which probably, looking at those numbers there in so many ways, there's like, well, what happens if those numbers don't get hit? That's probably the biggest fear when you have a sell target strategy like this, is that it's great, you can automate it, you can set it up and forget it in so many ways, but what if your price targets don't get hit is a big one. So I like this as a sell strategy to make it easy for yourself, because you get to calculate to a degree how much money you might be making, but remember, that's how much money you might be making. You don't get held onto these target sell prices if the market's telling you something different in so many ways. I always say that the market doesn't care about your sell targets, and so the market will move in different ways, but this is a great way to obviously set and forget, but you cannot leave this, because often this one can come back and bite you in the ear. But different strategy you can employ.
It's a bit, it's a bit broken, like the crypto markets maybe in recent days.
Yeah.
Time-based sell strategy, again, it's not something that we do personally, but over time, like, we have seen it become some people's, I suppose, guiding light in terms of how they go about selling their crypto. Again, it's taking away all the headlines, all the busyness, anything to do with what's going on in the global economy, anything to do with crypto-specific narratives or upcoming things to look forward to. It's just scrapping all of that and just saying, hey, in a year or 2 years, regardless of what price is doing, I'm going to sell a portion of my portfolio. People who have followed that, based on maybe crypto cycles, there's a lot of talk about 4-year cycles in crypto. Maybe we can talk more about that, like at the booth, or even tomorrow we'll speak about that. People who have followed that to a T so far this bull market are actually laughing at the moment and have done very well. So sometimes the simplest strategies can prove to be the best, whether it's for luck or otherwise.
Well, let's ask the crowd for the crowd's knowledge. And I want to know whether we think there is a Bitcoin 4-year cycle, or we think it's more a crypto, a global business cycle. So hands up who thinks that we are just a Bitcoin 4-year cycle. Not many. And hands up who thinks we are actually in a big global business cycle. So I agree with the second half, but guess what? The price right now is telling me that we are all wrong. And so we need to, treat that. And so if you had a time-based strategy, we know we're in cycles. There is a cycle. We can all agree on that. And so if you use time-based cycles like this, it's taking your emotions out. You don't really care about the prices as much, but it's going to automate it, and you're actually going to start selling. Because if you are just holding on, hoping for alt season, if you're holding on, praying that prices are just going to have these magical moments like they did in November of last year, it's not really a strategy. So time-based strategy like this, we know we're in cycles, we're exiting the positions constantly, and in crypto where we're so volatile, 95% down is the risk we're talking about. Anything that you can do to actually start taking profits is important. Next one, Matt.
Dollar cost averaging, it's often touted, and historically, to be honest, has been the best way to get into crypto. It's a great way to manage risk. So if I've got $100,000 to put into crypto, breaking it down into, thirds or quarters, or, doing it every month for, over the course of a year. There's a lot of talk about that, and historically it's done really well, but simply doing the opposite of that, averaging out of any position. A lot of people, think in binary terms, like it has to be all or nothing in terms of buying and selling. I would say more so with selling, it comes up a lot more of people getting almost paralyzed by the idea of, hey, should I sell everything now or should I keep holding? Often you can think about, hey, how did you get into the market? For majority of people, they average into it over time, and for some reason or another, people don't, come to the realization that they can also do the opposite of that. So it doesn't have to be selling all of your position tomorrow. Hey, take out a third of it, see how you feel, and then continue on if you are unsure. Otherwise, have a predetermined plan that you will average out over the course of a given period, whether it's weekly, fortnightly, monthly. That's up to you to decide. But again, a very sound, sort of reliable strategy. But again, it doesn't really take into account all the other factors going on with the business cycle and other crypto headlines and narratives.
Who felt like they've been punched in the face in the last month with their crypto portfolio? Who didn't raise their hands because you're lying? So I talked about, having those target prices at the start. They don't really work when the market is telling you something different, do they? And so, again, with Bitcoin, have that long-term vision. Don't worry about it. Don't care. Totally get that as a strategy. Totally agree with anybody who wants to sit here and say, I'm just going to hold Bitcoin for the long term. But anyone who tells me that, I'm just going to hold my altcoin for the long term and I'll be okay, you're not really looking at the data of what kind of happens with cryptocurrencies. Is that most altcoins do not come back and revisit all-time highs. Most altcoins do go down 95% during bad times. So you do need to have an injection plan in a way. When you're investing in these altcoins, have some rules in place. What if this happens? You need to think of the downside risk as well as the upside risk, guys. So where is that line in the sand? Like I've had multiple lines in the sand. I have communicated that with our members when I'm doing something with my portfolio because the downside risks just keep increasing in so many ways. So you must have an injection plan, whether it's listening to an expert you think of, whether it's going through a certain price point, have an injection plan, guys, because you're better off selling and the price going back up than thinking about it and not selling and the price going down. It's simple as that. That's kind of game theory in its best. You can only do what you can do with that position. So have an injection plan. Make sure you're thinking about that because this market is volatile, guys.
Yeah, for people who are a bit more short term, things like stop losses, you often hear about traders talking about managing risk. I suppose an injection plan you could think of as a similar analogy. But yeah, it depends on your style and your time horizon. Sentiment-based sales strategy, that is ultimately what we do at Collective Shift personally. Like, over my years, I've had the most success, from a profit standpoint by using this strategy. I know Simon has, I know even Ben, our founder, you might have seen all over Instagram, things like that. He's also, I suppose, been an advocate for this strategy. The hesitancy to, I suppose, share that with you today is that ultimately it's very hard to execute because of the amount of time and energy and that it takes to follow the crypto markets and the global economy. Like macro trends happening in the US, in China, all affect how my outlook on crypto and ultimately the sentiment and the metrics that we do track in terms of risk and the amount of greed entering the market. All of that is happening in real time. It can be difficult because you don't have your perfect Excel spreadsheet of all your price targets and everything like that. That can be helpful. But ultimately, this is the sort of sales strategy that I suppose is our bread and butter. It doesn't mean it's always going to be right, but I think it's where I have, to be honest, had the most success, in investing in crypto.
Yeah, and I guess, when it comes to sentiment like now, like, how do I know what that is? Well, sentiment right now, it's fearful, guys, isn't it? It's pretty easy to see that. When is sentiment good? Remember last year when Trump got in, everyone felt amazing. That's greed. That kind of is the most basic elements of the sentiment that you want to feel. And, it is counterintuitive in so many ways. When everyone's really fearful, that's the time to get in the market. When everyone's feeling greedy, that's the time to get out of the market. There's also other indicators. Probably most people have seen the fear and greed index for Bitcoin. We've been in extreme fear for one of the longest periods in time ever. And so that typically is a signal for a bottom. And so those kind of elements, there's a lot there to take involved and be involved in, but that is a good indicator of what's going on in the market in so many ways. And so don't try and just base off this, though. I still think automate things where you can and stick to your rules where you can, guys, because sentiment will also get your emotions charged, and guess what? It's the hardest one to execute because you never really feel like doing it. If you can automate your sales as much as you can, you're actually going to do better at it, I feel.
Yeah, well said. Like we could talk about this particular strategy for a long time. Like we do have more content available at our booth. You can scan the QR code and get access to a recent webinar that we did. I think that was the one we recorded in Miami not too long ago, and we did focus on sales strategy as part of that free content. So again, happy to talk more about it in the booth. I suppose as we recap here, Simon, given what you just said, the state of the market and the outlook and how everyone is feeling, we will talk a lot about that tomorrow. Obviously, where our plan is and how we're reading the market at the moment. But is there any main point that you're getting in your one-on-one sessions and just something that you're really finding is driving the message of how to navigate these really volatile times?
Yeah, for sure. It's quite easy. Is that, hey, guess what, guys? If you don't know, crypto is super risky. You might be watching people online who are telling you, you can make lots of money. And I do think that crypto is one of the fastest ways you can make money. But it's also one of the fastest ways to lose money. So keep that in mind, guys. You can lose your money just as fast as you can make it. We're all here for the green candles, the upside, but we've also got to be aware that part of that journey is being here for the downside periods as well. And so one of the things that I've learned from talking one-on-one with so many of our clients and talking about their portfolio structure and their portfolio allocation is simply that you don't understand the downside risk to your altcoins. So when you're looking at your portfolio of altcoins, take 95% off. Feel how humble that is to know what that dollar value can go down to. And you might have your altcoin that no, this one won't do that. Maybe you're right. Maybe your special altcoin that you have won't do that because of XYZ reason. But from what I've seen from the data and looking at all altcoins over the previous cycles is that it's very, very unlikely that your special altcoin can do that. Because the only one that I've seen that doesn't do that and continues to go to all-time highs is Bitcoin. So keep that as a humble thought. Your altcoins are at 95% risk of downside, guys. No one takes that into account. When it comes to selling, automate it when you can. Set your rules when you can. Make sure you have that plan in place. Write it down. Use friends as accountability partners. I have my community in Collective Shift as my accountability partners because I've told them what am I doing. I've got one of my best mates here, right front and center. He's my accountability partner. He keeps me, genuine in the space. I have someone here who's my accountability partner. So, crypto is kind of like a closed-off community in so many ways. We feel like there's no one to talk to, but find someone to talk to and make sure you're aware of what their plan is and what your plan is and share that. Write it down, stick to your rules, guys.
Yeah, that's a lot, driving that point home about sharing our own sell strategies together. It often can be noisy crypto, sort of hearing everyone's opinions. And as I said earlier, I would reinforce, just beware of people talking past each other when you're talking about risk management and also time horizons. So, in our community like Collective Shift, it is really, really helpful for a lot of people because they can hear a lot of different opinions about how people are exiting the market or even, to be honest, how they're going about buying and entering the market. And also from that community, you can, I suppose, have those accountability partners to really, keep you in check because of the emotional, forces that crypto can really bring about with all of its volatility. So again, if you want to hear more about what we do at Collective Shift, we are over there in the booth towards the center. We will be on various stages as well throughout the weekend. But we do have a team of about 20 full-time staff these days and hundreds of members around the world, mostly in Australia, who want to get market insights and also help managing their portfolio and things like their sales strategy, which we spoke about today.
I've got a little bit of time left. So let's end on some hopium, guys. When markets are down, everyone's fearful, but that's also the best opportunities in the market. And I'm not saying that means go and buy everything right now, but when markets are down, that's when you can find the real opportunities. If you're thinking long-term for Bitcoin and you thought it was valuable at $120,000 only 50 days ago, shouldn't it even be more valuable to you right now? If you're thinking long-term, what could it be in 5 years' time? If you're looking at an altcoin and you thought it was valuable 50 days ago and it's down a lot, does it have all the fundamentals? Does it have all the reasons to still be worthwhile in the future? These are opportunities, guys, not times to be fearful so much. So I think longer term, the market's going to go up. We're going to be okay as long as you've got a lot of Bitcoin, guys, because that's the only asset that continues to go up. Thank you.
Thanks, everyone.